part of We Trade HQ. It's a free community you can come be a part of. It's a platform that I built with my partner Jake. And it's a really nice platform. If you guys want to do some technical analysis with integrated trading view charts, you can do it right here. Search your favorite tickers, find out all the information, filings, financials, news, all that good stuff here. You can see it's just like its very own Facebook for any stock that you're looking at. So, first one we have is Twilio. Estimated earnings per share at a loss for 9 cents. I think they beat expectations, and I think that they may even come close to being cash positive. Earnings come in after hours on Tuesday. If you don't understand in-app communication solutions, kind of like, really nothing else, honestly. I don't know what other companies in the same type of realm as Twilio is, but this is really playing to that remote work side of things. They have a lot of really good stuff going on, and they have risen about 57% since last quarter. I think that they absolutely crush it. Their expectations were going to be up to maybe about 43% increase in revenue over this past quarter, and I think they absolutely crush it. That being said, of course, it's at its all-time highs, right? We're looking at this, and it's way up here. But there may be a pullback before Tuesday's earnings. Could be a little bit of a sell-off on Monday, especially with the fact that we still don't have a solution for the stimulus checks, right? They expired on Friday, technically, and we still don't have a solution. So there could be a pullback in the market overall, which could lend itself an opportunity to get in on Twilio. And a lot of these other ones, too, that are getting into their all-time highs as well or close to it. And I don't want anybody to be afraid of all-time highs. Okay. A lot of people, I get comments, I get feedback a lot of times when they're talking to me and be like, man, this is all the way up here. Why would we do this? Because whenever it breaks all-time highs, there's nothing that says that it has to go down because it's breaking all-time highs. This hasn't gone straight up. It really hasn't gone straight up. It's been climbing since May, but it hasn't been through the roof every single day. Hasn't been a linear move, and none of these have. So when it breaks those all-time highs, there's really good chances that you can get in on some good momentum. And so as long as it's not oversold, and I don't think are overbought, and I don't think Twilio is overbought, and none of these are, and it includes the last ones from last Stock Watch Sunday. I think they keep climbing. So if you were afraid of all-time highs, then you probably missed out on Zoom at $113 a share when I talked about that back in April and said it was going to continue climbing. Now look at it. Plenty of other ones as well. So Twilio, I think that it does end up beating earnings. I think they can become cash positive. If you're looking for a pullback, I like it around 249. And then if for some reason it does end up crashing down below that, it does look like on the daily chart this has a pretty steep fall. So I think that if it doesn't, I would be shocked. I would be shocked if it doesn't hold this 250 or 245. If it doesn't, probably ends up actually coming back down to maybe around 210. I just don't see that happening, but that would be the first place that I would look for potential entry or look for a break of those all-time highs that we saw last week. Next, Wayfair. Wayfair's expected earnings per share. Let me move on over to Wayfair. Their expected earnings per share are 82 cents, and I think that they absolutely crushed these earnings pre-market on Wednesday. We can see, obviously, that this has also moved as well. I think this is due for a pullback. We saw this thing gap up on Friday, rather. And come up to its all-time highs around 271 and then pulling back to around 266. Could a 266 be its area where it pulls back and then you have to try to figure out if you want to make an entry there or not? Potentially. I think that it does end up pulling back a little bit more. I would like to see it come back around 255 before potentially make an entry, or if it doesn't pull back, if it only pulls back that far, that's where I would go. If it continues to pull back, 237 seems to be a reasonable area for support as well. If it can't hold that 235 area, then comes down to 196. I just don't see that happening. We know about Wayfair, right? If you don't know what Wayfair is or what they do, they are a company that is, immersed in the e-commerce space as well. I mean, we know how hot e-commerce has been, and we got one more stock on here that's related to e-commerce in general, or directly related to e-commerce. And Wayfair deals with home improvements, furniture, that sort of thing. So when people are at home, they're looking around, they're looking at their ugly ass furniture and saying, hey, you know what? My couch still looks like grandma's, or maybe I still actually have grandma's couch in my living room. It's time to upgrade. So I'm going to use my stimulus check and buy myself a damn couch. So there's been a lot of that going on. So I think that Wayfair absolutely crushes it. We saw that happen last quarter. I think we see that happen this quarter. Wayfair is going to absolutely kill it. All right. Next, we have Square. If there's any indication, if PayPal was any indication of what Square is going to do this week, I think we're in good shape. Square is its little baby sibling to PayPal. I think they absolutely crush it. It's owned by Jack Dorsey, CEO of Twitter. They have, not Venmo. What's the other one? Cash App. They have Cash App, and they just opened it up to direct deposits as well. So I think this is absolutely going to kill it. And I think, look, what have we been talking about over the last several months, right? Frictionless transactions that don't involve hand-to-hand contact, even so much as handing somebody else a credit card or using a credit card machine. Square, PayPal, these types of platforms have been absolutely killing it for those types of reasons. I think that potentially it comes back down to around 118 area. It seems that it likes to live there, but don't count this all-time high here at 135 out. We probably see this run into earnings. If they beat earnings, look out. This is probably going to continue to move. We know what PayPal did last week. I think Square does the same thing. All right. Let me just check in with you guys. All right. Looks like you guys are chatting away. Good to see you all. Okay, cool. See some questions too. We'll get to those in just a second. Next, we have FSLY. FSLY comes in Wednesday after hours, which, by the way, all these Wednesday after hours earnings, I will be doing a live stream for on Wednesday, 3:55 p.m. Eastern time. So if you guys want to check that, come in and check this channel out during that time and see how they all fare. I think that it's going to be a lot of fun. It was a lot of fun over the last couple of weeks with Tesla, Amazon, Facebook, Apple, all those. So going to do it on Wednesday for some of the big ones as well. So you guys seem to like that a lot. So we're going to continue on with that. But FSLY comes in expected earnings per share at a loss of a penny per share. Coming after hours at a loss of a penny per share. I think they absolutely crush this, and I think it's laughable. If you don't know what FSLY does, they're in the cloud computing. They also, again, catering to remote work, which is just going to become more and more a thing. I've been saying this forever now. I've been pounding my fist on the desk here and talking about remote work, about how it's not going away. The cat's been let out of the bag. You can't put it back. Remote work is here to stay, Rona or no Rona. That's where FSLY comes into play. FSLY was one of the only companies, first quarter earnings, that increased their outlook for the year. And I think that they absolutely annihilate these earnings and come in cash positive. I think they absolutely crush it. We've seen a pullback here on a BS analyst downgrade after it broke over $100 a share, which, by the way, I said that was going to happen down here at $34. Go back and watch it. I think that FSLY continues here, and they crush $100 again. And I think this goes right on to 125, not right after earnings, but I think 125 is very much in their future very, very shortly. I think if they crush these earnings, it's going to be an absolute monster. It's not just cloud computing that they deal with. They have all kinds of other remote work solutions, Shopify, Airbnb. A lot of big names are clients of FSLY, and I think they absolutely just kill it. A lot of people have been worried after this pullback from $100 on FSLY. Got a lot of comments about this. Stay the course, my friends. You'll be all right. All right, lastly, we have Etsy, another fan favorite. Well, another Own the Chaos favorite. Etsy has been absolutely on fire as well. I've been loving on Etsy since around the 70s. Not the 1970s, the $70 range. And this has continued to absolutely crush it as well. $118 is where it closed at on Friday. Broke to new all-time highs then as well. I think this probably actually comes back down. With a little bit.
Give me a hell yeah!
Hell yeah! Who we got?
What?
What's up, Juan? Welcome to the Chaos Crew, man. Happy to have you. We'll see you tomorrow. All right. So again, Etsy, I think it comes back down, and maybe I don't think it breaks back below 100, but $97 is a area that it could pull back to for support if by some chance they miss earnings and then it keeps crashing or tumbling down. I like $97. Even if they happen to miss earnings, I'm still buying the hell out of this. If you guys don't know anything about Etsy, e-commerce platform, a very, very little sister to your Shopify's, Amazon's, and Baba. But the difference between Etsy is that they cater to people who are just starting out in e-commerce, people who are actually trying to get a little crafty, build some stuff, right? Tables, or they have paintings they want to sell, or masks. Etsy was the #1 place to buy masks. The #1 place to buy masks, April and May. I don't know about June yet. We don't have those numbers, but Their storefronts doubled in the month of May, and they've damn near tripled since the beginning of the year. Etsy, I think, absolutely kills it. They come in with an expected earnings per share at 39 cents. I think that is just a joke. I think they come in over $1. And I mean, look, can we all just agree that e-commerce is unstoppable? If you're not in one e-commerce stock, what are you waiting for? What are you waiting for? It's not going to stop. It's going to keep going. This train is off the rails. There's no way you're stopping this e-commerce train, folks. You know, let's see here. Here's a stat that's insane to me. According to the Census Bureau, their figures imply that less than 20% of shopping is still being taken place on the internet. Can you believe that? All the movement we've seen in e-commerce, and the Census Bureau still says 20% of shopping has been taking place on the internet. That is mind-blowing to me. That means also that these companies still have plenty of room to grow, and I just think Etsy absolutely kills it. We saw what Shop did. We saw what Amazon did last week. Etsy's turn this week, in my opinion. And there you have it, folks. My top 5 stocks to watch this week. And friendly reminder, if you want to see me live on Wednesday for after earnings, it'll be Etsy, FSLY, Square, a bunch of other ones. We have a lot of big earnings this week, so if you guys want to join me there on Wednesday as well, I will be live streaming for Wednesday.